Have you ever opened your car insurance bill and just stared at it, thinking, why am I paying this much? Nothing changed. Same car, same driving habits, and yet somehow your premium goes up, quietly, consistently, almost like there's a system working against you. So what's really going on here? Meet Harry. He's exactly the kind of driver insurance companies should reward. Careful, responsible, no accidents. He follows the rules, drives safely, does everything right. But every year when his renewal comes in, the price is higher. At first, he ignores it. Then he questions it. And eventually, it turns into frustration, because no matter how careful he is, it feels like he's losing control. And that's where most people get it wrong. We assume car insurance is simple. Drive safe, pay less. Sounds fair, right? But that's not how insurance companies actually calculate your premium. The truth is, your price is based on far more than just your driving. First, you're not the only factor. Where you live plays a huge role. Insurance companies look at accident rates in your area, theft statistics, even how crowded your streets are. Harry happens to live in a high-risk area. More traffic, more claims, more theft. So even though he drives perfectly, he's still paying for the risk created by everyone around him. Because in their eyes, you're not just an individual driver. You're part of a bigger risk pool. Let that sink in. You're not just paying for your driving. You're paying for everyone around you. Then there's your car itself. The type of car you drive can completely change your premium. Expensive cars cost more to repair. Some models are more likely to be stolen. Others have parts that are harder to replace. So even if two people have identical driving records, the one with the riskier car pays more. Harry didn't realize this when he chose his car, but that decision alone quietly increased his insurance cost every year. Now here's where it gets even more interesting. Insurance companies build a hidden profile about you. It's based on your age, your driving history, and in some countries, even your financial behavior. They use all of this to calculate how risky you are. The catch? You never actually see this score. It's happening behind the scenes. So ask yourself, do you even know what your risk profile looks like? Next comes something that feels like control, but often backfires: coverage and add-ons. When Harry bought his policy, he chose maximum protection, full coverage, extra add-ons. It felt like the smart, safe choice, and in many ways it is, but every extra layer of protection increases your premium. Because the more the insurance company might have to pay, the more you pay up front. The more protection you add, the more expensive your insurance becomes. And then there's one of the most surprising factors of all, the loyalty penalty. Most people think staying with the same insurance company will earn them better rates over time, but sometimes the opposite happens. Insurers know that many customers don't switch, so slowly, over time, prices creep up. Not because your risk increased, but because your behavior stayed the same. Sometimes, loyalty actually costs you money. But here's the good news. You're not stuck in this system. Once you understand how it works, you can start taking back control. Smart drivers compare insurance options every year instead of blindly renewing. They adjust their coverage based on what they actually need, not what sounds safest. They increase their deductible to lower monthly premiums. They choose cars that are known to be cheaper to insure. And most importantly, they stay aware instead of passive. Because car insurance isn't random, it's calculated. And once you understand the system, you stop overpaying. So tell me, have you noticed your insurance going up even when nothing changed? Share your experience in the comments. And in the next video, I'll show you exactly how to cut your insurance bill without sacrificing the protection you actually need.